there are segments of this economy that were very strong before the pandemic, and they're resuming their strength. There are other ones that are just plain baffling. I think we're all kind of surprised that retail's doing better, but then we remember Target, Walmart, Costco, these places added people. And then the incredible one, the only sector that really seems to be being hurt is the one that has the social distancing problem, which is restaurants. It seems as if the travel and hospitality people are gearing up, and I think that these numbers do reflect the reopening of some states that are now troubled. But I don't want to put a negative gloss on this. These are just very strong numbers, and we're not where we thought we were, we'd be, say, 8 weeks ago. We had a strong economy before. We're seeing the strength again.
So is this kind of number an Apple closing stores number, or is this a Disney still on track to open in July number?
Well, I think these are numbers where we really felt that there would be that the part of the country that is red hot, there was red hot going in, California, Texas, Louisiana, Georgia, Florida. I think that those were places that said, you know what, we're done. We're done with lockdown. Bring everybody back. And now we have to watch, because what they're really closing, remember, are bars and restaurants. And that's the pressure point of the economy. That did not look good in this report. But to emphasize that is to really miss the bigger picture, which is that we were at a very high level of employment. We're going down rather rapidly. Was it 17 straight weeks of jobless claims going down? At this pace, if they can get, in this big if, the Sun Belt under control, and they've not been able to, but if they get under control and you get sports back, then really it's just going to be restaurants. Restaurants is hopeless unless you can do contactless delivery and takeout.
But Jim, then what stops this market? If it's not going to be 50,000 cases a day and rollbacks and reopenings and concern about the economy in certain states, which are not insignificant states when it comes to overall GDP, what stops this train? I mean, again, we're getting back towards levels that would put us almost at even on the S&P for the year. And we've talked so often about the Nasdaq, which has had an extraordinarily strong year. Does it just keep going?
Well, there are certain companies that you come in and you can't fight the tape, whether it be Tesla, whether it be PayPal, Square, Etsy. Those are part of the Cramer COVID 100, so to speak. But here's the only thing I know that could stop it, David. If you had we have a press conference with the president. The only thing that can really stop it is if the employment in restaurant and travel and leisure and sports can't come back because we can't get control of the pandemic. So you have a kind of permanent level of unemployment in that area, and then those people have to go get jobs. And then you have people coming out of college, and they've got to go get jobs. And then you have the people who are using this to say, we're not paying our rent, which is a substantial number of people. So then mortgages default. And so the next thing that will happen is we will see bank earnings that do not reflect the rosier picture of people coming back. They'll reflect the fact that there's still a lot of people who are out. But, yeah, David, I mean, I know that there's some parts of the market that are very hard to rationalize a sell-off, because if you can't sell off the cruise lines, what can you sell off?